Hi, I'm Ben Coons, owner of Keystone Bookkeepers, and today we're going to be talking about everyone's favorite topic, fees for short-term rental property managers. These items directly impact your bottom line, and balancing these is the key to walking the line between a profitable business and one that can't retain homeowners. If you're managing 1 to 10 short-term rental listings, there can be a lot to think about when it comes to fees. Not just the amount you charge guests, but which fees belong to you as the manager and which fees are passed straight to the property owner. Disclaimer, no one likes the F word, fees. We're going to use it in the context of this video, but try to minimize that language for homeowners and guests. So that's what we're breaking down today. By the end of this video, you'll know exactly how to handle cleaning fees, damage waivers, and other common charges, so your statements stay simple, your owners stay happy, and your bookkeeping stays compliant. So, why do STR fees matter? At this stage in your business, every dollar counts. If you're keeping a fee that you shouldn't, owners notice, and when they do, that trust is broken. If you're passing through a fee incorrectly, you could be losing money and potentially creating extra work. You're also training your homeowners to expect certain things that can be hard to walk back. Getting clarity here isn't just about bookkeeping, it's about trust, consistency, and building a profitable business. Here's the guiding rule. If a fee covers a cost you incur as the manager, like a damage waiver, you should keep that cost off the owner statement and on your P&L. If a fee covers a cost for the property itself, like pool heat, it's typically passed straight to the homeowner. Simple, right? But the nuance is in how you categorize and communicate each fee. Let's walk through the most common ones you'll encounter, starting with everyone's favorite, cleaning fees. Guests, of course, usually pay a cleaning fee when they book a stay. If you hire and pay the cleaner yourself, we recommend keeping this with your business as revenue. You cover the cleaning expense and keep any kind of margin to pay for your time managing the cleaning staff. If the owner hires the cleaner directly, or if, and this is a big if, you charge a commission on cleaning, then it goes on the owner statement. But for most managers, keeping it off the statement is easier. We recommend keeping it off the statement for a few reasons. One is it ensures owner statements are cleaner and easier to read, which in turn yields fewer owner questions. Additionally, it avoids timing mismatches when the guest pays 1 month and the cleaner is paid the next. Here's a quick example. If a guest pays a cleaning fee of $250 and the cleaner costs $225, you earn a $25 margin. That margin covers your admin time and helps you run a profitable business. Next up, damage waivers. Damage is inevitable in the STR space. Most managers handle it one of 3 ways, which can vary depending on how they handle claims. The first 2 options are most relevant if you're using a third-party claims agency like Waivo or Safely. Option 1, keep claims off the owner statements. You as the manager cover minor repairs and handle the claims with insurance directly. Owners see charges only if the claim is denied. This leads to clean, simple statements. Option 2, pass all the claims to the homeowners. The owner is billed directly for repairs. Insurance reimbursements are credited later. On the plus side, this provides full transparency. Cons, statements can get cluttered and confusing, especially with timing differences. Option 3, self-insure via damage waivers. Here, you would charge guests a non-refundable fee, just like you would on the first 2 options, but you cover repairs yourself out of that damage waiver pool. The owner gets involved only if costs exceed that fee pool. This can yield faster resolutions, less admin time, but you need to have your claims budget dialed in. Here's a guiding tip. Most managers keep statements simple using option 1, where you keep those claims off the owner statements. But it depends on your claim frequency and owner preferences. Next charge is pet fees. If you're coordinating extra cleaning or managing wear and tear, you can keep part of this fee, but anything that directly covers property damage typically goes to the homeowner. Then you have ancillary fees like pool heat, HOA fees, or resort fees. These usually fall into the pass-through category unless you're paying the bill yourself. They're tied to the property itself, not your time or services. So again, they're typically going to go straight to the homeowner to help them cover those HOA fees or maybe their pool heating bill. Finally, we have the early or late check-in fees. Typically, property managers keep these to compensate for the extra work that you're performing for the guest, whether that's rescheduling cleaning or shuffling other guests around. Now, we cover the common fees. How do you communicate these to the homeowners? Start with the contract. Clearly spell out which fees are yours and which are passed through to the homeowner. And please standardize those contracts. No one wants to try to remember which condo unit keeps the pet fee and which doesn't. After that, make sure the owner statement clearly labels the fees that are passed through so the homeowner isn't left wondering if they're being shortchanged each month. Remember, consistency builds trust, so if every statement looks the same, owners stop asking questions. Here's an easy way to see if your fee system works. If an owner can look at their statement and instantly understand what you kept, what they're responsible for, you're on the right path. If they're confused or asking, why am I paying this? Where's these funds? That's your signal to tweak your system or improve your homeowner education. Now let's talk about how you can scale your business without headaches. When your statements are clear and owners understand every fee, you've laid that groundwork. The next challenge is making sure your system scales smoothly as your portfolio grows. Even at 1 to 10 listings, consistent fee management makes life much easier. And once you cross 10 listings, those small fee decisions start adding up. Having a system, whether that's a spreadsheet, your accounting software, or a dedicated platform, makes it easier to track your fees, communicate these clearly to homeowners, and avoid mistakes that eat into your profit or credibility. As we wrap up, remember, managing fees doesn't have to be complicated once you understand those core principles. Keep what you incur as a manager and pass through what belongs to the property or homeowner. Keep those statements clean, consistent, and predictable. At Keystone, fee management is one of the first areas we help managers get right. We make sure every fee is categorized correctly, statements are clear, and owners know exactly what they're paying for and why. At the end of the day, it all comes down to one goal: clear, consistent, and predictable financials that let you focus on what really matters, growing your short-term rental business. In our next video, we'll answer a question every manager asks: can you still DIY your bookkeeping, or are you risking problems? We'll cover when to do it yourself, what tools you need, and when to bring in professional help. That's it from me today. Thanks for watching. Subscribe so you don't miss the next video, and check out our other videos for tips on short-term rental management and bookkeeping. If you have any questions, drop a comment or reach out to us at keystonebookkeepers.com. We'd love to help. See you in the next video.